Hey guys, welcome back to the channel. Today I just wanted to talk about a couple of news stories that I saw on CNBC, as well as go through Warrior Met Coal, which is one of my investments in the public account. I have a few hundred shares of Warrior Met Coal, and I thought it might be good as its price has been pretty much stagnant for the past few months to go through the investment thesis for Warrior Met Coal, go through their financials, go through their presentations, and truly understand why I chose that investment and why I think it's a great long-term investment for years to come. So with that, let's get into it. But just before I get into these news stories and the analysis of Warrior Met Coal, I did want to make a plug for my website and at stockswithajay.com, just because I think it's going to be a great investor resource for everyone from beginners to experts. And I'm really proud of all of this work that I've done to make the site live and build it up. So I really want you guys to check it out. But basically, it has everything that you could want as a personal finance to investor type of experience level. So I have articles on investing, I have articles on personal finance, budgeting, retirement, and it's continually growing. So check it out. There's things like retirement calculators here that I built that will project how much you can have in retirement based on your assumptions. You can put your age, your current savings, monthly contributions, expected annual rate of returns, and this calculator will automatically figure out everything for you, present it in a visually compelling way, and even give you examples of scenarios where if you save more a month or skip something like daily coffee or restaurants, it'll tell you how much bigger your investment balance could be at the end of that time with those savings. It's really useful for just normal people looking to enhance their retirement, making sure they have enough in their nest egg when they retire. So it's really great. Another awesome feature, and that was personal finance, now I'm moving to investing, is a very complex topic. It's called discounted cash flow analysis, and I made a generic calculator for that, basically an analyzer. And what this basically does is it gives you an intrinsic value, a fair value of an investment based on assumptions that you give it to input certain assumptions about a stock or investment and derive a intrinsic value per share, which is really helpful when you're trying to do a long-term investment cash flow analyzer. I'm working on a very interesting piece of software that's going to be rolling out in the next few months that will give you access to custom stock data. Basically, you'll be able to look up Microsoft or Apple or any other company that's publicly traded, and it will do this analysis for you based on the assumptions. You won't have to put in the inputs. You will have that automatically populated when you select the company. Please check this out and let me know what you think about it in the comments below. So this is something I'm doing differently for this video and for the videos I've done in the past. I just wanted to go through some news events, and just because the news cycle is it's changing so rapidly, I wanted to touch upon a few points every video just to make sure that I'm keeping investors and retail investors in the loop. So I'm just going to pick a few news topics and talk about them. The first one I wanted to talk about is Trump and China now are likely to talk again very soon. This is just going back and forth, honestly, in my opinion. I don't think long-term investors should really pay much attention to these, day-to-day changes in political policy. and political talks, it's not really lucrative or or helpful for investors to, you know, switch up their investing style based on a turn of a dime, just because Trump and China are going to talk again. Yesterday there was a news event that there was irreparable damage done between the two countries because the accusations that were flying back and forth. So I don't really pay too much mind to this, and I just wanted to bring this up because I see these type of news events a lot on CNBC, and it's they're not going to talk, they're going to talk. Just ignore it, because if you're a long-term investor, all you really care about is the fundamental intrinsic value of those companies and how well they can compound their reinvested capital. That's what you should care about. So ignore these type of clickbaity titles and just move on to actual company fundamental news. So the next news story that I want to talk about is kind of along those lines, and we're talking about Him and Hers this time. So Him and Hers is going to acquire a European telehealth company called Zava. And the reason this stuck out to me is this point right here. The deal will expand Him's services to Ireland, France, and Germany, and will grow its active customer base by 50%. Now, that is a huge number. 50% of their own customer base. So I think they have like 2.3 million customers right now, if we go through this article. And there are 2.4 million subscribers. And they're going to add 1.3 million customers to that base. That's an insane number. That's an insane increase. So basically what that means is their revenues, if they are able to monetize all 1.3 million customers, the new customers, they're adding them 50, they could be adding 50+% to their revenues from this, if they are able to maximize and monetize all of these people. That's a huge increase to the revenues, the top line revenues of this company. And if they are operationally efficient, it is an increase in their net income, their bottom line net income. So this is huge for Him's company, and I'm really interested to see where the shares go from here. My only question with this news event is, I know that Hims has gone up recently. And when I was looking at it a few weeks ago, it was $27, and that was in the midst of tariff uncertainty and a whole bunch of other things. But I just want to know, like, if this news is the reason that it jumped from $27 to nearly double, almost 100% increase to over $50, or is it just because of the tariff uncertainty and stuff like that? So please let me know in the comments below what you guys think. Is the recent run-up in Hims just because the stock was depressed and the turmoil with the tariffs and all of that stuff? Or is it actually because it's responding to the potential and news like this that was understood before, and that's why I was running up? So please let me know in the comments below. The next news story that I want to talk about is the steel tariffs. And this was introduced like in the past week. And the reason I want to talk about this is because our feature story, quote unquote, is about Warrior Met Coal, which is a met coal producer who mines met coal for steel production. So I'm really interested in following these type of news events, because I want to see what effect it has on a commodity play that is used to make steel. So going through this article, basically Trump has introduced 50% steel tariffs, and so as the headline suggests, the prices in the US, the tariff imposing country, for steel are going to increase. The prices of steel is going to increase domestically here, but in Europe it's going to go down. And This is probably a net negative for met coal producer like Warrior Met Coal, since the demand for steel is going to be dropping because the prices are higher, which means the demand for met coal is also going to drop if the steel demand drops. Happening in China where they, are reducing the build out of, offices and homes, and that has led to a decrease in the steel demand over there. And so that has led to a decrease in the global met coal price per short ton. And that is what's depressing the industry right now. So this has a similar effect, but the source of the demand destruction is tariffs, not housing. Yeah, as a long term investor, I'm not really worried about this news headline because I understand that tariffs are a short term monetary policy. It's not meant or designed to become a longer term fix towards trade imbalances. So, as a long term investor myself in Warrior Met Coal, I'm not really concerned. I think the benefits and tailwinds that Warrior Met Coal has will outlast these type of shorter term monetary policies. So that's a good segue into an analysis of Warrior Met Coal and just why I think it's a great investment. So let's get into that. And so I just want to hit on some of the major points of their investor presentation, their last one from April. And I'm not going to go through all the details and stuff like that, but just to highlight the major things. So Warrior Met Coal has 3 mines, Mine 4, Mine 7, and Blue Creek. And Blue Creek is their new, flagship mine that they're building out. They've already started production and mining there. So 2025 numbers have some production. About 251,000 short tons of met coal have been produced from Blue Creek, but they're still ramping it up and they're still finishing up the project. So it will be complete if it's on time, in 2026, middle of 2026. But it's great that they're getting some production out of it already using continuous mining. And I just wanted to highlight that's part of their revenue streams now going forward. So now they have 3 mines in their revenue streams. So moving on to some other further highlights of their business is I want to address their customer revenue by geography and coal type. So you can see in the first quarter of 2024, they had about 47% of their customer revenue from Asia. But in 2025, first quarter, it dropped by 4%. And so I attributed this to the decreasing demand from China and what I discussed before in the previous segment. But this demand may be picked up by other developing regions in the world. So you can see that the South American customer revenue has increased by about 4%. And while Europe has stayed the same, and we are still waiting to see what the impact of these steel tariffs are going to be on Europe, Indian demand will pick up the slack from the Chinese demand decrease. So we're still waiting to see what happens there. The other thing I wanted to mention is that their high vol A coal type is increasing. So you can see in 2024 it was about 31%, and in 2025 it's 44%. So the dynamics of the coal type that they're mining, primarily from the Blue Creek mine, which is increasing, ramping up production and completing their project, it's changing the type mix of their coal types and what they can sell to customers. So moving on, let's go to their capital expenditures, which is super important. And here I just wanted to highlight that it looks like they are projecting and guiding for a certain number, but they're actually coming in under that, which is great to see. They're being operationally efficient. And like, for example, mines here, high end was 90 million, and quarter to date actuals is 11 million. A lot of ample padding to come in well below those numbers and have a surplus instead of a deficit in terms of their guidance, which is great to see. And I think the management is doing an excellent job of, protecting the investors' interests and making sure that everything is on time and on budget. Now, this slide is super important because it's basically the 2025 guidance and how management sees the industry and the business going forward. So here they're expecting about 8.2 to 9 million short tons of coal sales, and they're going to produce, and obviously this production number will change based on industry dynamics and how much supply is in the market, various other factors too, but they're expecting about 7.8 to 8.6 million short tons. And the cash cost of sales, 117 to 127 per short ton. Capital expenditures for existing mines, this is primarily for the mines that they already have, 90 to 100 million. And they're going to spend about another 225 to 250 million in capex for the rest of this year for Blue Creek. And it's pretty much a done deal, this Blue Creek, because they've already spent about 770 million in the ballpark of that number. We're probably going to see a huge reduction in capex in 2026, which leads me to my thesis about Blue Creek and Warrior Met Coal. They're going to be able to ramp up their production. They're going to be able to reduce their capex a whole bunch because Blue Creek will be completed and they're not spending hundreds of millions of dollars on it every year. And then the production from that completed Blue Creek will increase their coal production by a huge degree, which will obviously increase their free cash flow at the end of the day. So here's an update on the Blue Creek project. Obviously, I said that they're expecting a total expenditure of around $1 billion on this project, and they've already spent about 772 million. So if they spend another 200 million, that'll bring it up to their cost estimates, and they can stop spending on this project after it's complete. But everything's on time and on budget, as they've stated, and I'm really looking forward to the completion of this project in Q2 of 2026, which is when it's expected. But I already have shares, but I want to increase my share count before Q2 of 2026. Now, that's not financial advice, but that's my plan. I'm planning on increasing my shares maybe by double before this deadline. So I hope this has been helpful. Let me know in the comments below if you liked the news section that I did. I can continue analyzing news stories to bring more value to you guys going forward. If you're confused about some new news event or how it will affect certain stocks or stocks that you own, please let me know. And I hope that you got some value out of the Warrior Met Coal analysis. I did more research on it and more detailed analysis on my blog at Stocks with Ajay, so go check that out. And as always, these videos take a really long time to make and put together. So please like and subscribe and follow me on my channel and check out my blog, like I mentioned. So with that, guys, thank you and see you in the next one.